to zero a little bit more in here on that question of whether Disney could be a buyout target. It's a big question coming out of the media giant's third quarter earnings. You apparently shouldn't ask CEO Bob Iger specifically about it. Here's what he had to say when asked on last night's earnings call.
On the theme of considering options for Disney, there was an article published recently that speculated that the entire company could be sold.
I just am not going to speculate about the potential for Disney to be acquired by any company, whether they're a technology company or not. Obviously, anyone who wanted to speculate about such things would have to immediately consider the global regulatory environment. I'll say no more than that. It's not something that we obsess about.
Iger may not be obsessing over it, but some analysts probably are. Joining us now, Robbie Whelan, Wall Street Journal reporter who covers Disney. Robbie, maybe they're not selling the whole company, but there is still the question of parts of the company, what will be sold, and I think that's still very much on investors' minds. What are you hearing from inside the company and from investors and analysts about that question?
About the sale of assets, you mean?
Yes.
I'm hearing that Bob Iger is very anxious to reduce his exposure to the linear TV business, which not only is dying a fairly quick, painful death, but it also is something that he's been talking about for over a year. I mean, he has his famous quote from when he was not in the CEO's chair last year, where he said that linear TV is headed for a precipice, and we don't know. It's not a matter of if, but when this business stops being profitable. A lot of people think that once we hit 50 million U.S. households with access to cable packages, either through traditional cable or these digital services that bundle cable channels, that's sort of a psychological barrier, and there's a lot of people who are kind of going to drop out of the business at that point because it's going to be much harder to make money. But he clearly wants to sell whatever value there is left in that business. He's made it pretty clear there's a for sale sign on that. And he's looking for partners in ESPN. From what I've heard from folks who speak to Iger is basically that he wants to reduce exposure on linear very badly. He wants to get that done as soon as possible because it's a big albatross on the company's stock price. But also that he feels very strongly that ESPN needs to continue to be part of Disney going forward. And to the extent there have been rumors that ESPN might be spun off or is on the block itself, I've heard those rumors kind of, diminish by people who know what's going on.
Interesting. So, if indeed, as you were talking about, he's been wanting to somehow exit or reduce exposure to the linear business, why hasn't, ESPN aside, is it tough to find buyers for this stuff right now because nobody wants exposure or more exposure to this business?
There's some thinking that TV networks like that could sort of go the way of newspapers, the way they've gone the last few years, which is to say that there might be buyout firm interest from them. Certainly there's interest at a fire sale price in them. But I mean, don't forget that these networks and this business itself, for Disney at least, still throws off about $1.8 million, $1.9 million a quarter in operating income. So it's not like they're actually losing money on this business. It's just that there's been this inflection point we've reached at Disney at least, which is that businesses like the parks are really a lot more reliable at this point than linear TV. For years and years, linear TV is what subsidized every experiment that Disney wanted to try. It's certainly what subsidized the push into streaming and sort of the all-out push that they made at the very beginning, where they were focused entirely on growth and on attracting new subscribers and basically giving it away for free to a certain extent. That was all paid for by these advertising fees and subscription fees that the linear TV business generated. They're just not coming in as consistently anymore, not by a long shot.
Robbie, what's clear here, too, is that there have been two very different types of eras that Bob Iger has had to govern Disney through. And previously, it was the one where they were acquiring some of the major kind of content producers and then also making specific deals in order to make sure that they could grow out their business and kind of engage with a larger fan base. And now in this one, it seems like we're watching kind of an executional strategy where trimming some of the costs, some of the fat, trying to figure out exactly where that next wave of growth or leg of growth is going to come from, and ultimately what the succession plan looks like at Disney. But for right now, with Bob Iger over top of the company still, what is the defining type of narrative that kind of annexes itself to his leadership right now through this era?
Well, yeah, it's a really strange thing to see in a lot of ways. Bob Iger as seller, and as you noted, for most of his career and for most of his time leading Disney, his legacy and his the imprimatur that he's put on the company has been to acquire. He's bought Pixar, he's bought Marvel, Lucasfilm, and then of course the 2019 deal to buy most of the entertainment assets of Fox. That was a $72 billion deal. This is a guy who's made being acquisitive his signature for the Walt Disney Company. And he's had great success. He's grown the company from, something like 40 billion market cap to, at one point it was around 270 billion market cap. I mean, the growth has just been phenomenal, and that's why he has the reputation that he has. So looking at him and seeing him saying, our new MO is we're going to sell in order to right the ship and to stabilize the company for the future is jarring for a lot of people. And I think it's actually jarring even for him. I think if he had his druthers, he would be out there thinking about what's the next company, the next library of IP that he can acquire to sort of lead the company into the future. And to be clear, there is one acquisition that he's looking at, which is buying the rest of Hulu from Comcast. I mean, Disney's